Hi everyone, so today I want to tell you about my strategy for the upcoming 2024. So let's look back at 2023. What actually happened? So inflation was high, Fed went out and said we're going to increase interest rate. Increased interest rate is going to slow economy and put inflation down. Once inflation is down to 2%, we're going to cut rates back again while increasing all the interest rate, the bonds, the fixed income instruments, they became cheaper. The ETF for that TLT went down. Inflation numbers came out and they were pretty good. So inflation is being slowed down. And everyone thinks that Fed is going to cut rates in the next year, probably the third quarter of the next year. In November, it was huge growth of S&P 500 index. So it grew almost by 10% just during 1 month from its low, as you can see. Yes, like 11%. And my current portfolio, out of 153,000 US dollars, I have investment into equities of 113,000 and fixed income. This is bonds, US treasuries, investment into 32,000 US dollars. And my recent trade was I bought another US treasuries. You can see this cost basis. I already had the US treasuries for 14,000 US dollars. Later I bought for $3,000 another one. And today I bought the one for $8,000. So now I have the investment into US treasuries in total amount of about 30,000 US dollars. So as S&P 500 is almost at its all-time high of 4,800, so the current rate, as you can see, 4,569. And everyone was talking about when Fed announced the increasing of interest rate, how hard the economy of United States and global economy will be harmed because of that. And the two definitions came out like soft landing and hard landing of US economy. So the hard landing scenario was about the increased interest rate will slow down economy a lot, and then employment rate will go higher, and the economy will struggle a lot, and obviously all the stocks market will go down. And the soft landing scenario was that the current increased interest rate, they will not harm economy too much. Yes, and currently after the inflation was slowed down and the unemployment rate isn't critical yet, everyone considers that the next year is gonna have this so-called soft landing. However, I want to show you the estimate, the year-end target of 2024 of S&P 500 by different financial institutions. And you can see the Deutsche Bank considers that S&P 500 will hit 5,100 next year. This is increased by about another 12% the next year. And Bank of America, they think it's going to be 5,000. Goldman Sachs, they think that it's going to be 4,700. So it's actually just a slight growth of just 3% per year of 2024. Morgan Stanley thinks that it's going to be 4,500, and it's almost no change because the current level is 4,500. And JP Morgan thinks that S&P 500 will decline next year to the point of 4,200. So what they think is going to be minus 8%. So I think that S&P 500 will move the following way. So it feels that in the middle of next year, it will rebound a little bit from its current peak. But then once the decrease of interest rates by Fed will be announced, it will go and will break through the all-time high, the previous all-time high in the late 2021, and will go up. So my strategy, as I already hold about 30,000 in US treasuries in bonds, which currently have the yield of 4%, which is pretty good for bonds, I will try to catch these moments of the downturn and will enter into equities here in order to have a better entry price. This is a pure bet, but it feels for me that the soft landing will be there, but it will not be as optimistic as it looks now, just going straight up. So my strategy will be to look at this moment and exit my bonds positions and re-enter with the same money into S&P 500. Thanks for watching this video, and please subscribe to my channel.